The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Thanks for joining us today. On behalf of the Environmental Finance Center Network, I would like to welcome you to our webinar today, Must-Have Financial Policies for Small Water Systems. My name is Savannah Bekowski, and I work at the Syracuse University Environmental Finance Center. We have a great webinar lined up for you, but before we jump into the presentation, there are a few logistics that we need to cover. Everyone will be kept on mute to ensure audio quality of the webinar. If you have a question, please type it into the question dialog box on your GoToWebinar control panel. Feel free to submit questions or comments at any time throughout the session. All questions will be reserved for a Q&A at the end of the webinar. And in the case that we cannot answer your question live today, we will be following up with you via email. We will be posting both the presentation and a video recording of this webinar on our website. And you can reach that website at www.efcnetwork.org. A follow-up email will include a link to all of these materials as well. We do not submit our webinars to licensing agencies for pre-approval of continuing education credits. We will be providing certificates of attendance as a courtesy. If you have joined this webinar with the intention of using it to support PDH or CEU hours, please know it can take 1 to 2 weeks to generate the attendance certificates because we must verify your attendance to this webinar. In order to do that, you must have joined this webinar using the unique join link you received when you registered. We cannot guarantee that this webinar will meet requirements for specific CEU or license renewal needs, but if you have any questions about this, please feel free to email us at smallsystems@syr.edu. And for just a little bit about us, here at the Environmental Finance Center Network, our program provides training and technical assistance to small public water systems in all U.S. states and territories to help local water systems achieve their goals and stay in compliance with the Safe Drinking Water Act. And here you can see the various centers that make up the Environmental Finance Center Network. There are centers and partner organizations spread throughout the country. We all work together to create solutions to difficult how-to-pay issues of environmental protection and improvement. And on that note, I would like to introduce our speaker for today. With us today, we have Mary Fleming. She is the Financial Management Specialist for RCAC. So Mary, I am giving you presenter mode. Welcome and take it away.
Thank you, Savannah. I'm going to share my screen with you. Okay. Good morning, everyone. I'm talking to you from Sacramento, California. It's still morning here, so those of you on the East Coast, I'm still drinking coffee. We're looking at must-have financial policies for small water systems. My supervisor came to me a few weeks ago and said, I want you to do a webinar, pick out 3 of what you think are the most important financial policies for small water systems. Well, that was kind of challenging. As a financial management specialist, I work in the field with small water and wastewater utilities, mostly in California these days. I used to work across the 14 western states, but I'm pretty much in California these days. And I see a lot of difficulties with small utilities and their policies. So I thought about it and I selected budgeting, internal controls, and monitoring. These are 3 pretty wide categories that I could probably spend an entire day talking about any one of them, but I've kind of consolidated it, made it very compact for this 1-hour class. So we're going to be looking at it from a 10,000-foot level, not get too much into the nuts and bolts of it, but just an overview of things to be thinking about. Financial management, as I see it, is a broad term that covers a lot of activities that the governing body and the management will perform. The main thing is protecting the assets to ensure continuity with the water system or wastewater system. So amongst the many things that a governing body and management are tasked to do in their financial management is developing some financial policies. what I've put together here are some areas where you should think about financial policies. And in many cases, depending on what size utility you're working with, you may have policies that are much more abbreviated. Many times with the very small utilities, they will have policies and procedures kind of documented together. And the difference is a policy is the deliberate system of principles and guides to guide decisions and achieve goals. So the policy is your statement of intent, and the procedures are the way you're going to get there. But you will see some of them that I'm talking about today may be, in your estimation, a procedure rather than a policy. In any event, they should be documented. Our objectives today is, I said I'm going to be looking at budgeting and internal controls and reviewing. So one thing that I see frequently missing with very small utilities is establishing any kind of reserve fund. So we're going to talk a little bit about that as well. Why do we need policies? Well, to clarify roles and responsibilities, for one thing. Frequently, I work with utilities that have not established their policies. And what happens is much of this is in somebody's head about historically how it should be done. And if that person is gone, then there's a problem. What can happen is that if you have absence of adopted policy, the staff and governing body are likely to operate under a set of assumptions that may or may not be accurate or productive. I frequently see that people are implementing procedures that really are not productive. So we want to standardize those procedures, establish consistency. I'm not sure if I told you, but I'm an accountant, so my favorite word is consistency. I don't know if it's really my favorite word, but it's probably my most used words. The policies also set some boundaries and establish the standards of conduct. So what makes a good policy? I'm going to show you a couple of policy examples that I think are really good. So obviously they have to be clearly written. If people do not understand what they're saying specifically, then their value is not going to be, it's going to be reduced, because you have to understand what the policy is saying and directing you to do. They have to be fair and equitable. And I will tell you something that I see in the field all the time, and I'm not sure how many, if any of you work in the field, but I would bet that you also see this, that I will ask somebody for their policies and they will say, oh, we've got them around here someplace. Let me see if I can find them. They need to be readily available. Excuse me. They need to be readily available. And of course, they must conform to state and federal laws. I'm so sorry, I'm losing my voice here.
So
Planning and budgeting. Your budgeting is going to be one of the most important components of your financial management. It plays a meaningful role in the effective utilization of available resources in order to achieve overall objectives. So it has to be a good, strong budget. And for all of us who work in the field, we've probably seen all kinds of budgets, and some of them are not really so useful as a tool. So what we need to do is to encourage it to be developed in a manner that is most useful to guide the governing body and management. Here's an example of a typical policy. This particular one is budget preparation. I like this format because you will see that the policy number, the overall number is 3020. And then you have subsequent subsets. And in this, you can have it, this could actually even get down to procedural level, and frequently it does. And each subset has a number. The reason this format is good is that it is easy. Budget policies are, they are a fluid document. There are constantly law changes and rule changes, and also you may find gaps in your policy. So as you go along, you can recognize that another policy needs to be added or one needs to be amended. And it's very easy to find it with this way. It's very easy to, if you implement a new subset, it's very easy to put it in there. And it's very easy when you're looking up your policies, and they are to be referred to frequently. They're not to be just put in a shelf and forgotten about. But it's easy to find the policy that is applicable to what you're dealing with. So when you are developing your policies and procedures, what is the process? Generally, what happens with a policy is somebody notices that one is needed, and it could be the auditor, it could be managers, it could be the governing body, or someone who's a staff says, you know, we really need a policy for this. And so it goes into development, and then it goes to the governing body, and that's how it's made official. So you develop the process, and then you must determine who develops the budget. Now, here's something I see all the time in the field is the utility puts the accountant or bookkeeper in an office and says, okay, go develop next year's budget. And what he or she will do is probably use last year's budget. I see this all the time. And from that, they determine an amount to add and call that their new budget. This is not going to most likely give you a good, strong budget that you can rely on. For one thing, your operators, who knows better than anyone else what condition your system is in and what kind of repairs you're going to have to make in the upcoming year. The accountant probably knows salaries. Those are pretty usually confidential and not shared with everyone else. So obviously he or she needs to be involved and can project a lot of things based on what the historic evidence is. But then they need input from other people. If you're working for a large utility, they will have departmental budgets, and each department will develop their budget, and then they get together and make an overall budget. But if it's a small utility, you probably don't have that luxury. Another thing I have seen in small utilities is, let's say that they have several activities. They provide water service, they provide wastewater service, and they do street lights. They frequently will have one budget for everything. And so that's one of the things when I come in and I work with the community, I say, no, we need to break this down by enterprise. And there's a number of reasons we need to do that. I have found several organizations that one of their enterprises was actually bleeding all of the net income, and they weren't aware of it because they were budgeting all together and reporting all together, and you could not tell that the water system really needed a rate increase because it was relying on the other systems to come in the black at the end of the year. When is the budget due? Obviously, you'd like to start the year with a budget, so it should be prior to the beginning of the new year. Some utilities start way early, and I would submit that the larger utilities really have to start early. But hopefully, for even a smaller utility, you're going to have the budget completed and finalized at least a month prior to the new year beginning. But that needs to be in your policies and procedures. When are we going to do it? Who approves the budget? Like I said, if you're working with a large utility, you may have individual departmental budgets, and those will probably be approved by the department head, the pre-approval anyway. And then ultimately it all gets together and puts together in one big budget, and then it goes to the governing body. It may go through several approval cycles before it makes it to the governing body, and frequently they will send it back too and say, no, we can't do that. We want to change that. But you need to document in your policies what your specific routing system is and who has the authority to approve it. Frequently, budgets, in a nutshell, are plans, they're guesses, and we're doing everything to make them as educated a guess as possible, but the likelihood that you are going to end up the year with spending exactly what you have budgeted is highly unlikely. So you may find that if you way overspend in one category, that you need to adjust to reduce another. You have a finite number of dollars in revenue that you're working with, and so you have to stay within that. So you may need adjusting to your budget, and if so, you need to identify what the process is. Is there a dollar amount or a percentage amount, or at what point does it have to go to the governing body for approval? Operating and non-operating revenue and costs. These should be recognized in your budgeting policies and procedures. There's a number of reasons why you want to recognize them. For one thing, operating revenue are those revenues that are directly related to the provision of the service. Operating costs are those costs that are related directly to delivering that service. You want to be able to look at your operating costs compared to your operating revenue and determine if your operating revenue is covering your operating cost. Non-operating revenue, many utilities I've worked with have that. A really common one is that they will have like extra property, and a cell phone company comes along and says, we'd like to rent that property to put a cell phone tower. And it's really nice. It's very nice if they can come up with another source of revenue. But they need to separate that from their operating revenue, so you can clearly and at a glance know whether your operating revenue is covering your operating costs or not. Okay, planning, long and short term. When it comes to your planning for keeping your infrastructure running, that's going to be short and long term. You're going to have stuff that's going to have to be replaced next year and the year after, and some that won't be replaced for 30 years. So you need to look at that and always keep your eye on the ball. When you're doing your budgeting, I recommend that you do a budget at least 5 years out. And there are some funders, I think USDA is one of them, that will require you to have a 5-year budget. Don't quote me on that, because we work with several. We also work with our state revolving fund a lot, and I think USDA is the one who requires 5 years. Decide on the budget format. As I was talking earlier about operating and non-operating revenues and costs. Get a format where you can easily identify those separately. When you're doing your budgeting and planning, is a good time to look at your rate and user charge reviews. So I would suggest that in your policies, you may have the policy that your rate and user charge will be reviewed annually as you're doing your budget. Past due, late and delinquent bills, I see those only growing here in California. I work primarily with disadvantaged communities in terms of financially. So money's scarce for them, and it gets very difficult sometimes to be able to collect on their charges. So you need to relook at those when you're doing your budgeting and planning, and that should be in there. How often you're going to do that, and what the procedure is for that as well. Okay, system financial reserves. And I would recommend that not only do you put this in your policy, but there is a board resolution regarding these reserves and how much they're going to be. Operating reserves. General rule of thumb is that if you bill monthly, from the time a cost is incurred, we'll say, for example, from the time your chemicals are purchased, until the time that you send out the billing, and then the time that the customer pays their bills is usually about a 6 weeks turnaround time. So for that reason, we recommend that you always have, if you're billing monthly, have at least 6 weeks in operating reserves. 6 weeks is 12.5% of your annual budget. So when you are setting this up, your budget, look at that, make sure that those operating reserves are included. They're there for in case of cash flow issues. People start running late on making their payments, and unusual expense comes up, then you're not operating in the red. You've got some reserves to dip down into. Debt reserves. This is a funder required reserve. And if the funder requires the reserves, you cannot dip into this. Usually what they will require is 1 year annual payment that is both principal and interest, and they usually will give you 10 years to accumulate it. Emergency reserves. This is those reserves. So if something catastrophic happens to your water system and you are not able to deliver water to your community. This is catastrophic. You don't have time to go out and get a loan or a grant. So what do? You try to have some reserves there to do that. I am told by most of the operators that I work with that that one piece of equipment would probably be a pump. And so you need to have the reserve set aside for that. Again, you're going to be setting your rates based on your budget, so you may want to establish those reserves over a 5-year period. Short-lived asset reserves, this is generally also something that I'm seeing more and more required by lenders. The difference between the short-lived asset reserve and the debt reserve is that you can dip into those if for the appropriate reason, what those reserves are for. Generally, you don't have to figure out how much you're going to set aside. Generally, your loan covenants will tell you exactly how much you have to set aside annually for that. Capital improvement reserves, this is long-term replacement of your system and infrastructure. And that is an ongoing reserve that you will fund forever. From the moment you put a piece of equipment into a system, it starts to wear out. So hopefully you're going to be so far ahead of the game and so well documented that as soon as you put a piece of equipment into service, you will start saving to cover the cost of it when it eventually wears out, even if it's 40 years from now. A lot of the utilities I work with do not have the money to do that, and they have not planned for replacements because there has been an attitude that, well, the government will cover it for us. We can't always know that. We can't know that you're going to get a grant. So I recommend to those that cannot afford to fund 100% replacement, that usually the loans or grants that they receive will be 80% of the cost. So try to fund that 20%. And there should be some kind of documentation in there of how you're establishing that. Here's an example of a fixed asset capitalization. You should determine, this is another thing I'm looking at 3032.3. I do a lot of reviewing of books and stuff because I do rate analyses. And I see many utilities who are capitalizing like something they paid $150 for, and it boggles my mind. So one of the things in their capitalization is how much are they going to define as a capital expense, as an asset? At what threshold do they determine that it will not be expensed out as an expense, but will actually be capitalized to be held in depreciation and replaced over time? So those are some budgeting questions to ask yourself. Internal controls is a huge topic. Seriously, I'm sure we all could do a whole day on this, and I will tell you that I have seen more in working with small water and wastewater systems. I've seen more fraud, errors, and abuse than I had in my entire career as an accountant, which is much longer than I'm willing to admit. And I think the reason is that frequently we have very small communities with people who do not necessarily have expertise in understanding how to financially manage stuff, and so it becomes a real problem. So it's really, this for anyone is important, but particularly for these little communities. Here is a graph that I got from the American Institute of Certified Public Accountants, and this demonstrates to you how fraud is discovered. If you look down at the external auditor, and I have people telling me all the time, well, we don't have to worry about that because we have an annual audit. Well, I certainly encourage an annual audit, but if you look at that chart, you will see that only about 4% of fraud is found through an external audit. Most of it is discovered in those, I'll say those four things there, the four on the left, those are all actually kind of a internal control piece. If you look at the totals, it totals to more than 100%, and that's because there's some overlap between these. But setting up in strong internal controls is absolutely essential. So this chart really tells you how it is. There's 4 key elements to internal control. The control environment, and basically what this means is that the environment has been set by management and governing body for ethical, responsible, careful behavior. This is trickle down. I have never seen ethics and care coming from the bottom and going up. It goes from the bottom down. So if you find that the top is not practicing ethical behavior, it is highly unlikely that you're going to see it in the lower echelons either. It needs to be demonstrated from the top up to create this environment. Risk assessment, you need to start where you are and look at every area and see where you have a potential risk. And sometimes this can be one of the hardest areas, because if you aren't familiar with ways that errors, fraud, and abuse can happen, then there may be things that you don't know to look for. We're going to look at a few examples here, but there are many, many, many. And by the way, all of the examples that I give in today's class are things that I have seen out in the field, and much, much more. So you need to do it, need to go through, look where there's risks, and try to close those gaps. Control activities. This is stuff like segregation of duties. By that, I mean try to separate duties so that one person is not in a position to perpetrate fraud, errors, and omission, and be able to cover it up. You want it so that if it happens over here, somebody over here is going to catch it. And it's not all nefarious. I talk about fraud, but it's not all nefarious. There are a lot of accidents that happen. There's a lot of, particularly with these small utilities, they frequently have somebody keeping books who does not really understand accounting. And sometimes there's communication issues, which leads us to the next one. Information and communication systems. I'm not talking about your computer systems here. I'm really talking about information being, well, transparency, I guess, widely communicated to both your internal and external customers, your staff, and your customers and your vendors, the people you work with. Keep those communication systems open. And that is not to say that your IT systems are not extremely important. This is becoming a huge issue. As we all know, every day there's something else going on with IT. This is the times that we live in now. Monitoring, constantly looking at what's happening, updating your policies, reviewing your financial statements, and keeping your eye on what's going on. Okay, we have a chat box here, and I'm going to give you all a little moment to think without having to listen to my voice. What internal control would apply here? First, is there a problem with it? Utility gets a good deal on cell phones if they order 6 cell phones. They only need 5, so the general manager takes one home for his daughter to use. I'm not seeing anybody writing.
So we did receive a few responses, Mary.
Okay, they're not showing up on my end. Okay.
No worries. So we're kind of, the general response we're getting from attendees is that this is not good. It's a problem. There's a diversion of funds. This is not ethical. It's a misuse of public dollars. Generally saying that there is a problem with this statement.
All of those are accurate, and thank you for your responses. Another thing to think about, and I kind of look at this as a control environment issue, besides all these other things, because what kind of message is this general manager giving to his staff, his or her staff? There has to be a strong division between what belongs to the utility and what belongs to staff. Okay, here's another one. First, is there a problem with this? Due to lack of sufficient revenue, remember, all of these are things that I have worked with out in the field. The governing board votes to discontinue employee retirement fund. The bookkeeper and the employees are notified that they're not going to be funding the retirement fund anymore. So the utility stops paying the provider without any notification.
So attendees are submitting their answers right now, saying that this is
Okay.
a problem with potentially poor communication, unethical for sure. This may be a violation of federal or state laws.
Okay, these are all good. I look at this as information and communication element, and I will tell you that this little community decided they could not pay for retirement anymore. And what happened was they quit paying the provider, and a year later they're in a lawsuit for $3 million from the provider. So this was a really, really tough situation. And that's happening a lot in California at this time because several of the utilities have subscribed to a specific retirement fund provider and then reneged on it, and now the provider's suing them. So this is a very difficult problem, and it ended up being one much worse than it was originally. Okay, what control element would apply? And first of all, is there a problem with this? A detailed budget for the upcoming fiscal year is developed. The governing body approves it. The budget is filed for reference when the next year's budget is prepared.
And so as folks are answering, I will just reiterate, you can send your answers through that question dialog box. And so some attendees are getting some answers in right now saying that, oh, this one is going back and forth. We have a few answers between this being a problem and that some folks do not see the problem with this. It seems like a good procedure, good planning.
Okay, no, I would say this is a problem. And the control element that applies is monitoring. The budget should be, you should use it as a cash management tool, compare what's actually happening to what has been budgeted, and on an ongoing basis. So yeah, and you may not have understood that that was what I was getting at, and that's okay. Okay, the bookkeeper enters new vendors in the accounting software, opens the mail, enters vendor invoices, cuts checks, and mails payments. Is there a problem with this, and which control element would apply to this?
So we are getting the majority of our responses saying that this is an internal control problem. It seems to be a separation of duties related to this issue, that there's no separation of duties.
Okay, that's exactly right. This would fall under control activities. There's no segregation of duties, and this leaves the utility wide open for errors, omission, and fraud. I'm going to skip this one, and we're going to get right into control activities. That's segregation of duties, and again, that's making sure that a person is not in a position to both perpetrate errors, omission, fraud, and conceal it. Physical controls, for instance, if you have assigned your staff cell phones, who has control of that? Where is it, and how are you maintaining it and keeping track of it? Performance reviews. This is extremely important. I think small companies, as a rule, and not even just small utilities, any small company thinks that performance reviews are not really necessary for them because they're so small, but I highly recommend them. Stay in touch with your staff, keep them, let them know what they've done right and where you would like to see improvements, and make them aware that you are watching them. Information processing controls, and I will tell you that the information processing in terms of the computer itself is all getting so over my head that I can't talk too much about how to keep your computer safe. But also there are things like, do you have an approval process so that if somebody purchases some supplies, you have somebody else to approve and say, yes, this is a legitimate purchase. So that's also those kind of information processing controls. Another example is if you have employees who are turning in timesheets, do you have somebody reviewing those timesheets and somebody who's in a position to know and they're authorized to sign those as an approval? Okay, here's some other things that you need to look at in your reconciliation procedures. This is one way that many errors, omissions, and fraud can be discovered in the reconciliation process. So how are bills, receipts, and payments reconciled with ledgers and accounts system? Many of the utilities I work with do not have, their accounting software is not sophisticated enough to connect their billing software to their accounting software. And so that leaves a gap there for all kinds of things to happen, especially if they are not reconciling their general ledger control, accounts receivable control account to their residual account, subsidiary account, then they can find out that there's all kinds of things going on. So those should be reconciled with each other frequently, monthly, I think. How are daily and monthly financial transactions reconciled with bank statements, cash transactions? Petty cash fund, of course, is one of the easiest and most frequent places for theft to occur because it's usually a nominal amount, and so frequently there's less attention paid to that, but it could. Okay, we're just going to go through a couple of these because we're getting up to the hour. But here is a policy or procedure. The operator is building, I'm saying it again, I've seen all this stuff out in the field. The operator is building a new bathroom in his personal residence, his or her. He or she orders materials through the utility where they work, and then those materials for building the bathroom in his or her personal residence are paid by the utility as equipment repairs and maintenance. What kind of procedures could you put in place to help eliminate this? And I will tell you that you will never have all risk completely covered. When you think you do, then something else happens and you find out you don't. But your job is to keep it to minimize the risk to the extent possible. Is anybody answering over there, Savannah?
Yeah, so we have received a couple answers. There has been reconsolidating daily spending, segregation of duties and physical controls, approval processes, and again, separation of duties.
Okay. Yeah. On this one, I strongly go with the approval processes that, and this here again, you get into, if you're a really small utility, you could be that one operator is the only one working there and the only one ordering it. But there should be, when something is ordered, a description, a notation of why, what it's for and why it's needed. If you have more than one person who would be qualified to identify what that piece, what that materials that came in is, then an approval process, yeah. You have to set authorities for people to be able to approve purchases. Okay, I'm getting concerned about running out of time, so I'm going to skip these, but they are there for you to go back if you want to look at them. Okay. There are a number of difficulties in implementing internal controls in small systems. It's really hard. The primary reason is that usually they don't have enough staff. So segregation of duties becomes very difficult. They can't afford to hire more staff. There's a significant number of cash transactions. I know some utilities who have completely quit taking cash because it's too easy for somebody to put it in their pocket. But that can be inconvenient too, because there are many people in these small communities who do not even keep bank accounts. They pay in cash for everything. Complex accounting rules, if you have somebody who really does not understand bookkeeping, then it can seem very overwhelming to them. So in that case, training will help. Regulatory focus, that's what most of us are in the business to provide clean, safe drinking water for the community. And we could be so focused on keeping those regulations, keep making sure we're in compliance with all of them, that somehow internal control slips through the cracks. And there's less resources to support the accounting function. How can internal controls be implemented? Well, you need to have, if you're too small to have segregation of duties, then you need to have a really strong approval process. And in some cases, you may have to push up and push down, meaning you, I certainly do not advocate for the governing body to micromanage, but in very small utilities, it may be necessary for them to take some small pieces of this, even maybe going to the post office and opening the mail and looking at it before it's passed out. But some little things like that, you may have to push down to try to get some volunteers in there so that you can get enough in. But it's difficult. It's very difficult for a small utility. Okay, when problems happen, and they do frequently, have a plan and make sure everyone knows that you have a plan. Act quickly and fairly, document everything, and use outsiders to investigate. It is not uncommon for people to feel less threatened or insulted or whatever if you have an outsider coming in. I know, as I do a lot of rate studies, that frequently I find these little utilities that I work with that I can come in and I can tell them something and they will listen to me, whereas their board could tell them exactly the same thing and they will argue with them and tell them no. Although I have gotten beaten up by some of them, not literally, but figuratively speaking. Find out where the system broke down and go back to the drawing board and say, where do we need to fill these gaps? Okay, we're going to take a quick look at financial statements. There needs to be policies because monitoring is a piece of this. Which ones are we going to review? Who produces them? How often? What's the timeline? And who reviews them? I recommend that the statement of financial position, also called the balance sheet, this shows your system's net worth, how much you own, how much you owe, and how much is actually your net worth at any particular point in time. Statement of activity, or the income statement, shows the results of your operation over a period of time. These are usually a 1-year period, and it's usually based on your fiscal year. So whatever period you are in that fiscal year, it'll show you how much revenue you have gotten and how much expenses you have and what the net results of that are. Cash flow statement. This breaks down all the financial transactions of the system in terms of how they affect cash flow. A good example of this is I have frequently heard people who are not the accountant type say, well, according to our income statement, we made $100,000 in over revenue over cost last year. How come we only have $10,000 in the bank? The cash flow statement sort of gives you a synopsis of how this happened. Budget comparison reports. Remember back when I said that it really was not good to develop the budget and then put it on in a notebook and save it for next year. The budget comparison report compares what you budgeted versus what your actual costs are to date. You can use this as a cash management tool, and it's really good for that. If you see that you're overspending or getting too close to spending on one line item, maybe you can adjust. It depends. There are different theories about budgets. For some organizations, once the budget is developed, that's it. It's carved in stone, and you either overspend or underspend, but you don't change the budget. Others find the budget to be a little more fluid, and this is going to be defined which way you're going back in your policies, your budgeting policies. The budget comparison report. Obviously, if you don't know how much you're spending compared to what you budgeted, then you could be in trouble. It needs to be watched constantly. I recommend that the budget comparison report, the statement of financial position or the balance sheet, and the income statement be reviewed monthly. And that's hard. I know it's difficult. And what I also find is that there are many small utilities out there where there is nobody who really understands how to read them and what to make from them. So we do training sometimes, go out to the communities and show them how to read their financial statements, because they need to be using these as a guide to direct them. Additional reports that you may want to have in your policies, your bank reconciliation, especially if you're small. If you're a larger utility, you probably have a management level person to look at these reports, or you have the checks and balances in place that someone else can review what someone else has done. But there are ways that money can go out the door and not in the way you intended, that could be uncovered through these reports. IRS reporting, you may want to look at your 990, your payroll tax reports. Fraud can happen in those. Sales tax reports, if you do sales tax in your particular utility. Workers' compensation report and funder financial reports. All of these are places where you can uncover errors, omission, and fraud. So take looks at those, and yeah, you'll be busy monitoring. Hopefully you're working with a large utility that you don't, as if you are a governing body, don't have to dig into the trenches like this. But like I said, I work with small utilities. I think the largest I've worked with had 5,000 connections, and the smallest one had 19 connections. So these are very small utilities that don't have a lot of funding for multiple staff. Okay, that's all I had planned for you. I would like to thank you all very much for being here. And here's my commercial to you. My company, RCAC, provides technical assistance to communities wanting to evaluate their system of internal controls. So contact us if you have a system that needs that. There's me again. I'm Mary Fleming Leslie, and thank you all so very much. Savannah, do we have any questions or comments that we need to look at?
We do. So an attendee did submit a question for you, and her
Okay.
was, Her water utility is regulated by the Public Service Commission of Wisconsin, and they do not
Okay.
allow utilities to set rates that include money to be set aside as a reserve. Do you have any suggestions on how to work around this?
Well, I will tell you that most of the states I work in consider setting aside reserves as part of the true cost of providing the service. And I'm so sorry, but I don't know what the laws are specific to your state. So this makes it very difficult for me to answer. I am so sorry.
Well, what we can do is I can follow up with you after the webinar, Mary, and we can make sure that we can answer this attendee's question live.
Thank you. Thank you.
Yeah. And so we did receive another question. An attendee asked, what is the biggest error you see in budgeting with small communities?
What I usually see is what frequently happens. I always tell everybody, do the budget for your costs first, because what I see happening a lot is they figure out how much revenue they have based on their current rates, and then they make their cost budget fit into that, and that just does not work. But I have seen some significant shortcomings in budgets that they just cannot cover. One I can think of that, fortunately I wasn't working with them at the time this happened. I'm so glad to report. One had kind of a different situation. This particular utility, I know about them because the state came to me not too long ago and said, we want you to do a rate study for them. They had arsenic in their water, quite a lot of it, on an ongoing basis. So they received funding from the county, I think about $2 million, to build a water treatment plant. Well, their budget did not allow for the cost of operating the water treatment plant. Somehow, and I don't know where and I would have to find the lender somewhere in there, had some issues as well. But they built the plant, and then 6 months later, the plant was shut down because they could not afford to operate it. And they ended up being about $200,000 in the hole just on their operating budget. Needless to say, this water utility ended up going into receivership. I don't know if that's something that happens in other states, but it happens a lot here in California. If a water utility exhibits that they are unable, they don't have the capacity to manage their utility, the state will come in and say, we're going to have somebody else manage this for you. So the state came back to me a few months ago. It was a temporary receivership, and they said, we want to, what happened in the interim, they have dug a couple of new wells that are just fine. And so now the company wants to take their water back, and the state came to me and said, can you determine what kind of rate they would have to charge their customers? So they can be large, they can be small, but for most of the utilities I work with, it is so tight that even a little bit off on several line items can just really break them. And it can be a very long time before the utility can recover from that. And nobody that I'm aware of gives loans for operations. It's only for construction. So when they over spend in operations, it's a real problem.
Thank you, Mary. So we do
Uh-huh.
have a few more questions that have been queued, but at this time, since we are coming up at the top of the hour, we will be able to follow up with those questions offline via email. And so to wrap up, I do just have two last quick items. The first
Okay.
is our general poll question. As Mary said, her organization offers technical assistance, and the Environmental Finance Center does as well. If you would be interested in learning more how we can help you or get connected with experts like Mary and a few of the other partner organizations, please let us know. And we will close this poll in 5, 4, 3, 2, 1. And then lastly, in the chat box, we do have a evaluation link coming out to you. If you have a few moments to let us know your thoughts and any feedback of today's webinar, that would be wonderful. So Mary, I do want to just thank you again for being here with us today. Your expertise was phenomenal. And if you have any last things to say, go for it.
Well, just thank you to everybody. I know it's an investment of your time to be here, and yeah, it's good to have you here. Savannah, thank you so much. I really appreciate it.
You're very welcome. And so I'll be in touch with you so we can get those questions answered.
Okay, very good. Bye-bye.
Thank you all.